Hi, my name is Steve Nomura. In this video series, we're going to talk about why real estate investment is ideal. In this video, I'm going to talk about E and A together. E stands for equity, A stands for appreciation. These two words, equity and appreciation, go together very well. Equity means fair market value of the property minus liabilities. That's an equity. If you have 200,000 value house, then your loan amount is $150,000, your equity is $50,000. Potential value that you can cash out is equity. Appreciation is the increase of the value of the property. Let's talk about these two together. It's much easier to understand. There's two types of appreciation. One is passive appreciation, or sometimes people call natural appreciation. Another appreciation is forced appreciation. If you look back the American history, last 50 years, the average of appreciation is 6%. Of course, sometimes value goes up, goes down. But if you look at the average of those appreciation, we have about 6% appreciation as average. If you have $100,000 house, if you maintain very well and keep it nice, 1 year later, this property value becomes $106,000. This is a natural or passive appreciation. If you keep this house for 10 years, each year you have a 6% appreciation, means 60% appreciation for 10 years. If you have $100,000 house, 10 years later, your house value may be around $160,000. This is a natural or passive appreciation. But sometimes you buy house, distressed properties, and then put some money and then fixing up. In this case, let's talk about more concretely. You bought a house. This bit distressed property for $50,000. You put another $50,000 to repair and make it nice house. This house value gonna be maybe around $150,000 or maybe $170,000 or more. In this case, you created $50,000 or $70,000 equities. We call this kind of appreciation is forced appreciation. You put some money and then repair it. You add more values and you had more equity in the house. This is called forced appreciation. If you have forced appreciation, you have more equity in the house. Therefore, equity is going to be created by natural appreciation or by forced appreciation. If you think this is very helpful, please click like button. Also, if you have any questions, comment, please leave it in the comment section. And please subscribe for future videos of this series, also other videos. Thank you.